Hyper with a weekend video clip, and it's Sunday the 12th of January. I'm talking from Thailand. I seem to pick up a bit of a cold in the last years in the UK, so excuse my voice, which is not quite at its optimum level. Basically, this is looking at a weekly chart of the Dow. We've got this major resistance both here, which is the this trend channel there, and the green line, which is the highs, the 2000 high and the 2007 high, which the market's currently going over. I'll just expand this chart. Okay, right. If we take the peak here, there's a possible wave 1 here, a wave 2 here, then a 1, 2, and now a 1, 2, and 1, 2, 3. Then this trend channel thing is wave 4, and now we're in wave 5. So although on this count this isn't the end of the matter, it does mean we should be close to some kind of correction as this 5-wave form off the 2012 low about around 12,000 winds to an end, and we get whatever comes next. Let's have a look at that particular rally. Okay, here's the low around 12,000. Here is the 1, 2, 3, then this 4th wave like that, and then the 5th wave like this. So now we'll have a look at the 5th wave. What we find here is we find a move above the trend line, a retest, which is very common with important trend lines, which probably accounts for all this toing and froing at that level. And now a 1, 2, 3, and what looks now like a 4. I mean, it looked on FTSE like we've already seen the first move down and possible 5th wave. Then we broke to new lows, which triggered the extreme stop I mentioned the other day, but now I've rallied again, which has stopped me out. I know some of you are still short of the trade at this point. If we look at this, again, we really want to look at this final move here, because this is now the important bit to look at. And I can't actually get the whole thing on the chart, but this is the low here. So there's a 1, 2, although it's a bit of a 3-part 1, then the 3rd wave, and now this A, B, and I'll just move this to get the whole chart in place. Right, so A, B, C. So in terms of time, it's gone a bit longer than the wave 2. That does happen. It's almost been a 2-week move. I mean, this is, of course, this corrective move is the entire action since the new year. So it hasn't been a great new year as far as markets are concerned, which is a worrying sign, as I've mentioned in the reports. When you get negative action, or at least sideways action, in the first few days of the new year, which is only very positive for all the reasons all the psychological reasons we know about, it means there's some major forces holding the market back. Now, having said all that, it therefore looks like now that we've got a 5th wave coming. If it is, and if it's the same length of the 5th wave here, the 1st wave here I should say, which took us from about 15,700 up to around 15,900 thereabouts, so 200 points. So 1660, that kind of thing, is a kind of rally you'd expect on that basis. I mean, these are only guides. You can't be too precise, especially this could be a peak, major peak. So it doesn't mean to say that it couldn't go a fair bit higher than that. But right now it looks positive. Having said this looked positive before, I've been calling for some kind of move up, but it's just dithering about really. But again, we have a call for this. Having said all that, it is expiry on the coming Friday. So expiry weeks tend to be quieter, although whether you actually get much quieter than the last 2 weeks' action remains to be seen. But expiry week is important, can be very pivotal. So we'll have to see how that develops. But right now, the action looks like we're going to see higher prices. Let's have a look at FTSE. This is a daily chart. In some ways, we have a similar pattern in that we've got a possible 5-wave form, 1, 2, 3, and then this drift 4, with one more rally now looking due. But on the other hand, it's very different because, of course, we peaked in May. We saw 5 waves down in May. We're now seeing this continuing and somewhat confused picture. But that could be a 1, it could be a 2. It could be 1 of 3, this could be 2 of 3, and this could be 3 of 3. It just doesn't look much like it. Nevertheless, right now it looks like we're going to go higher. So let's have a look at the shorter term there. Right, this is the entire rally since the middle of December. So a nice clear 1. This is the same chart as on the Dow, actually. 2, 3. Now we've got this drift sideways, which looked like it was over there, but it wasn't. It then looked like the rally here could be a 5th wave failure, sort of a diagonal type thing. Hence the suggestion we sell on extreme stop below there, so we broke down and then we rallied. So we're now going up, and looks like we've got further to go. In fact, again, if it's the same, if wave 5 is the same as wave 1, then the rally there, which is about 150 points, so about a bit less actually, is a guide, but no more than the guide. So 6.8 maybe. I mean, obviously 6.950 is a key level, as it was a peak we saw in 1999. So we're now 15 years on from yes, well, 14 or 15 years on, and the market is only just beginning to equal that level, and that of course includes all the distortions that are done in the various currencies around the world. So the point I'm making here is that it looks like we're going to go higher here. Let's have a look at the very short term. This is a 10-minute chart, so we have a strong rally there, a correction here with the various jumping around on the news. And you could see another pullback actually. I mean, it could just fall away. I mean, the market can do what it wants to do, but right now it looks like we're going to see another attempt at new highs before this is resolved. But I think generally expiry week is a week that can be best avoided, depending on what you're trying to do. And it's actually after expiry that things can become more interesting. But right now the chart pattern suggests that the next move will be higher, but maybe not for much longer. If we look at the Nikkei here, we've got this 1, 2, 3, 4, possibly 1, 2, 3, 4 now, and the fifth wave still looks good actually. We took profits above 16,000, so that's been bagged, still half long though. No reason not to stick with that for now. Alright, gold has now seen another rally, so we do have a pattern here, 1, 2, 3. This could be a fourth wave, and now a fifth wave rally. So, I mean, it's not ideal in the sense that the fourth wave is a lot longer than this is rather pathetic set 2 wave, and we haven't seen any evidence of a peak. But if we now see a corrective rally and we find support around 12.20, then buying spikes around the 12.20 level would be something you ought to be looking at. And I'll leave that for today. Even because my voice is about to fail. Anyway, I hope that's interesting and useful. Do have a great weekend. Thanks for listening, and bye for now.